Good morning, everybody. Welcome back to the RationalInvestor.com's Daily Brief, Wednesday, August 12th. Brian's still on vacation, so it's just us here today. Thanks, everybody, for all the birthday wishes. I really appreciate it. A bunch of people reached out to me yesterday. That was awesome. So thank you, guys. I love this place. It's so awesome to just hear from everybody. So, again, I appreciate that. Let's see, today we got Kieran on to talk about some day trading stuff, and then David Eisner is going to be joining us. Kieran's, of course, our level 2 instructor, and TRIOG, who also is a trader over at Top Step, so I'm sure he's got a lot to tell us that's going to be pretty interesting. I'm looking forward to it. We don't really talk about day trading too much in the Daily Brief, so this will be a good chance to do that. And then David Eisner is going to come on and talk about Thinkorswim platform, and then also an indicator that he's been using. So I'm not going to get into anything. I'll just let these guys get to it. So Kieran, are you here with us?
Yep. Hey, Kevin. Hello, everybody.
Hey, what's up?
A couple of level 2ers will have already had a taster of this. I gave them a little bit of it at the end of the last class. So
cool.
Yeah, be nice. I just go through my daily routine. I guess some people will be interested to see what I go through for day trading. It might help or might not. Who knows?
Yeah, I think it's gonna be awesome. Let me just get you set up on full screen here.
Cool.
There you go. So you should be good to go.
Excellent. Yeah. So basically, I start each week and each day exactly the same. And everyone who plans, I suppose, to become a day trader should have some sort of a routine and, of course, a plan in place. I've transitioned slightly from a setup mentality. Basically, instead of a setup, I have criteria, and all it is basically is very similar to a setup, but the difference is you can flip very quickly. So it's a if this then that trading plan, which acts on setups, but if something doesn't happen, you just change your perspective pretty quick. So we'll get into it a little bit now. I'm currently going through a little bit of coaching, one-on-one coaching with somebody at the moment, to help me with my emotions and scaling while scaling up. So I'll touch on that a little bit later. And then anybody who has completed the level 2 is welcome to join me and Murat at the moment. Have a plan. We've had it already a little bit. For those who've seen it, it's the Ayatollah Rock and Roller Room. We started and we took a break because I started this coaching. But we're planning to go back either the end of this month or the beginning of next month, where people can pop in. You won't be able to talk, but you'll be able to see what we're doing. And we're basically day trading the New York session for 2 hours. And if a trade comes in, it comes in. And if it doesn't, it doesn't. But yeah, we can answer questions. And then after a while, once I get settled in there, I'm planning to bring basically kind of anybody who wants to be a day trader or has an interest in day trading. I'll be offering tutorials or coaching for a personal level as well with anybody. So let me get stuck into my plan. So as I start each week, I check obviously econs and things like that to make sure, number one, you have to be flat. Brian's probably mentioned it multiple times that you have to be flat for certain events during the week, because the volatility can just tear you a new one, you could say. But anyways, after checking the news at the beginning of the week, set some alarms, and I come in and I check the cut report, which is pretty simple. It's updated every Friday evening. It changes, and it can give an idea where the big boys are playing, as everybody who's completed the level 2 understands the content here. So I check in on that just to get an idea where we are and where we're potentially heading in the week ahead. And then just clear that, delete it, move it. Then I move on to my weekly time frame. So I start high, as everybody should. And I am an advocate of volume profile. I live and breathe volume profile. Day trading, that's basically my number one technical analysis tool. Volume profile. I don't really use other things. I do check in on these OBV and RSI just to see, momentum waning. But generally I pay all my attention to volume profile, and I go, as you can see from my screen here, I go all the way back out a couple of years, and I just mark the levels of the value area in the POCs for those years, and then I have the 2-year POCs because they play significance in lower timeframes. So everything I do on these higher timeframes, they're just to create horizontal support and resistance. Again, for anybody who's completed level 2, think of it like a kind of a mix mash between volume profile and tricking out your charts. That's basically what I do, and I find these levels very significant. As you can see, they play a role when you get into lower time frames. When you're trading back and forth, basically, you want to know if a significant level is in play. Either you're getting out of a trade, or to make sure you're not getting into a trade at the wrong place. That's what it's all about. So that's the weekly. I also use the weekly 55, the weekly 13, and the weekly 21, and the weekly 80. I think it's an 89 if I remember. Oh no, that's the McGinley. Oh yeah, and the McGinley dynamic. It's just another type of moving average in here that I use again. As you can see, these are the ones basically through practice and going back and checking that for me on the weekly time frame, I find the most value. So it's all, as we know, everything you kind of get exposed to here in TRI. It's all about making it your own. So yeah, that's what I've done in that respect. Okay. Then I move into the next time frame down, and it's a daily. Basically the same principles, same ideas, a couple of different indicators I just look in on, don't really pay too much attention to them for what I'm doing, in such short time frames, as you'll see when I get down into them later. Again, this is just a yearly profile, and I just use it to give me, all I do is I'll set the alert that I'll come in, I'll update it, and I'll drag the POC. I don't need to have an alert at the high because the high is the high, but I'll set an alert at the POC here, the yearly POC. And then I have, again, the 13, the 21 McGinley, the 30, the 50, basically a couple of 200s, a couple of major moving averages that we've all come to know and use for anybody that does. So that is my daily time frame covered. Then I come into, this is kind of another mix mash of level 2 concepts again. So you can, I suppose you can kind of figure out why I'm the level 2 instructor, because I have basically used all the tools on a continuous basis. Yeah, so down here we have the jackpot, if anybody is familiar with it, and then this is a what would I say? I was going to say, I'll say it, a bastardized version of the Delacour index that I use. And then I just have 2 moving averages on here that I use to track trend. So above the daily on these 2, trend is good. Start to find weakness if they break below on the 4-hour, but when the 2 are in compliance like they are, trend is solid, really, really solid. So I just use it again, just as a quick flick in here to check in on these, and then I close it out. And then I come in to another version of horizontal support resistance. It looks a bit messy here, as you can see, but I don't really pay a whole lot of attention to these. All I do is these are starting from a 12-month all the way into the daily. All the way into the weekly, and then of course a fib, a main fib for the current moves or whatever. And then we have our gaps, things like that, things of significance that are important to me. I mark the levels, and then I note them. I put them on my my lower time frames. In here, you can see I stick them in here, so that I know what's happening when I'm down in the lower time frames. So I don't have to be flicking back and forth between charts all the time. I set up each day particular levels that are of consideration to me, and that's it. I don't put all these. I just pick the ones that are in my area, and then when they get triggered, I'll come back and check this chart. That's it. So that's the levels chart. So these are basically just, I'll just flick into the higher time frame so we can see how they're marked. So they're like you got tops, yearly opens, yearly closes. Then I go into the quarterlies, same idea, and I just go down through the timeframes and set these because these play really good. Again, it's all about horizontal support resistance. That's all my volume profile. All my levels are all based on horizontal support resistance, and that's how I trade. I trade back and forth using market structure between horizontal support and resistance. So that is that one. Then I move in to the next time frame, which is the 4-hour. I track the 4-hour spot market. This is kind of the spot market. It's the OAMDA chart. It's a CFD chart, but I use it because, again, volume profile plays a big role in here. But these naked POCs, as you can see, are super valuable for levels as well. So I'll set alerts at these levels. Then I'll basically ignore that chart. I'll go back. So I trade futures for anybody that doesn't know. This is just a 2-hour. Again, just to look at the 2-hour. This is the same profile from the 2-hour to the 4-hour, and I only use the 2-hour again for the moving averages. So tags, if I make this one bigger, you can see I want to know where I am in relation to. So this is the monthly profile. As you can see, we came down here nicely, tagged the POC and got rejected off it. So I'll set alerts at these levels when I'm trading to get notified. Maybe time to get out, maybe time to start hunting for reversal. This is all you need to do because you're just trading back. The market just goes up and goes down. So if you can find criteria to remove emotion and make your trading, or what would they say, as we kind of say in your robotic, you take decision making out of the picture, and you're just following a strict set of rules. That's what it's all about, basically, criteria. Yeah. So on the 2-hour, then I use the 21 and the McKinley. And again, this is a modified hull that I use. And you can see again, over time, I've just from using them and practicing paper, I went a bit mad for a year or two. paper trading, and building data, basically, to find out what I find the most value in. So as you can see, I mean, they play quite a considerable role when you're looking for tags, or exits. They play quite a considerable role, actually. For me, again, it's a personal thing to me. Mightn't work for everybody, but it certainly works for me. So as I said, a monthly profile. I'll set value high, value low, and I'll play the Hogue mentality of this. In the higher time frame profiles, if it doesn't reach value low, it'll most of the time reach the POC. Probably even higher than the 80%, I would say. It will reach the POC if it doesn't reach the other side of value. And of course, these are constantly changing. So I drag these forward each morning, maybe sometimes twice a day, just to see how they're playing out. As you can see, we're showing strength here. I haven't had an opportunity to get trade today at all because it's just driving higher. So that's my 4-hour. Again, it's all about, it's just levels again, and moving averages again from volume profile. Volume profile levels, and then moving averages for indication of either time to get out or watch for potential reversal. Everything's potential until proven otherwise. Yeah. So that is the 4-hour, and I guess you can see the trend. We go into the 1 hour, and I have the same or similar moving averages. As you can see, the 21 has a huge significance in all these time frames. Plays a really good role, and my McGinley dynamic, and again, of course, profile. So I do still use TradingView's weekly profile, but not as much, because from a day trading perspective, I've actually moved on to a different platform, which I'll get into in a little while. And rather than me having to come in here and put this on the chart all the time, it has a 5-day profile automatically on the day. You can choose to put it on the chart, so it updates itself for the trading week. So it saves me a lot of time, and it's respected more. I find the levels off it are respected more because it's continuously being updated as it rotates. So you might miss something sometime if you're slightly behind. The profile might have changed, and you won't see it. So yeah, but I still keep it because I check in on it. Still set the auto alert here and there with it because it's still useful. Again, all levels is all I'm getting from this. And finally, the 30-minute, exactly the same. I'm just looking in here in the 30-minute. I'm looking for divergence in RSI because of the time frames that I'm trading from. This is the one that I need to pay attention to for my particular criteria, you could say. On here we have session profile. I don't use this as much anymore, again, because I will show you when I get into Sierra charts. They have session profile, but it's broken up. So it's split between the Globex session, which is the overnight, and then the New York session, which is obviously the most important because all the major volume is traded through the US session. And having those split, the US session profile plays a huge role intraday, back and forth value areas. This brings in the Hogue play very, very much so from the New York profile. Again, same moving averages, they play a role basically in a lot of my timeframes. You can see they act quite very well, you could say. Again, just information, that's all. And I want all this information, basically, it's set up for me to come without thinking. So I just get an alert and then it's like, okay, this is what I have to do. It's not like I'm constantly trying to look back. So all the work basically is done at the beginning of the day. I'll go back and check and see if I've had any alerts triggered overnight, make sure that I'm not at them, and then I'll just reset them. And finally, that's all the basic, that's basically all the hard work done. Then I come into my my timeframes, which I trade from. So actually, I don't know if people are too familiar with tick charts or range bars, basically they're called. And range bars remove time from price. So when we go in, so I start at the beginning of the week again, excuse me, and I set up levels because they're really, really good for tracking horizontal support and resistance. And when you're trading futures, the stops have, well, it depends on your trading style, but stops have to be super tight. Each tick is 12.5 bucks. Each point is 50 bucks. And that's only on one contract. So it's quite large. So you don't want to take risk. You want to minimize, obviously, your risk as much as you possibly can. So that's the idea behind these. These are really, really valuable for tracking horizontal support resistance. But not only that, is reading market structure, reading what is happening, i.e. with supply and demand in the market, and recognizing when that changes. It's something I struggled with for a long time, and then I finally got it going. So knowing when the bias of the market switches, preventing myself from getting a bias in a particular direction, which I used to suffer from. And I suppose through all that suffering, I found a way to get away from it. And that's purely by reading market structure or price action, as some people call it. So I use that at the start of the week. That's a higher time frame, maybe a 10 tick or a 20 tick. Again, I've transitioned to Sierra charts because the platform is much better from a day trading perspective. But the ease of use of TradingView, I don't think I'll ever be able to leave TradingView because it's very, very simple. Whereas Sierra charts is like a learning curve all by itself. It takes considerable time just to learn the ins and outs of the platform. It's quite technical, but the rewards in the end are quite good as we'll go into it. But again, so I use it, trade from a 3 minute, well, I gather criteria from a 3 minute post levels. So I have levels, for instance, I'll have considerable levels, and then I'll have to be either above or below my moving averages. And as you can see, my entries might come in on tags or near tags of these resistance. This moving averages acts quite well to, what would I say, to fit my criteria for entries, to reduce my risk. Works really, really well how these wrap around back and forth. But again, it's a whole learning curve on itself. But I also started, I don't know if many people use it, but as you can see, I'll just scroll back and see if anybody can see. So this pink line is support. Came up to it first, resistance, support, resistance. Now, you'll see where I got this from, and some people will be blown away because this has been on my chart for weeks and weeks and weeks. And it continues to play over and over and over again. I guess some people might be able to guess where I'm going with this. There's some advocates who love it, and there's some people who hate it. But I'm certainly a fan. I see. I don't know if anybody can guess what it is, but yeah, you can see this is on a 3 minute chart, and this is from a Gann study, which I have drawn on a daily, and it continues to play for as long as until we get some other significant, we'll call it what's the term, vibrational signature. Until we get a new vibrational signature in the market, then I'll go in and I'll make a new one. I'll zoom out to the daily so you can get a look at what we're looking at here. Just turn off some of the noise here. We will go out to the daily so you can get a decent look at it. But yeah, so I also love GAN, of course, because it plays huge. I mean, um, it's kind of crazy how it works. I have I can't tell you the explanation behind it. But all it is I've drawn the GAN study to the first vibrational signature after we would say the corrective move here. So this is the beginning of the new move. And then I drew this back. So I started drawing this back, would have been after this area. So sometime back in the beginning of July. So about roughly a month ago, basically, I drew this GAN study, and it still plays out on a continuous basis as we get into these blue and pink, so the pink speed bumps and the blue lines. And as you can see, this is all set. So I've locked, for anybody who's done the level 2, they know all about it. But for anybody who's just observing and hasn't completed the education program, this has to be put on in a certain way. You can't just come along and stick this over the chart. And as you can see, it's locked. It's bending and flexing with the chart because it's locked to a particular scale. That won't change as I go down into the timeframes without getting too much into it. But super, super valuable in lower timeframes. And again, we don't take. I still apply the same rules. I never take any trade from any one reason. I never take a tag entry. I'm building criteria when an entry gets tagged if I'm looking for an entry, but I'm also going to take, if I'm in a trade, I'm definitely going to take profit at a GAN level. Absolutely, it's going to be a take profit level if I'm in a small little trade. Because more often than not, as you can see, it definitely plays a role. Some mathematical, I don't know, curves in the universe and time and space. I have no idea, but there you go. It works for me, so I use it. That's what it's all about. It gives me significant edge. That's all. Anything I'm using here is all about finding that edge that makes my decision process easier, over and over and over again, easier and easier and easier. And that's all I'm looking for. And then I go into the 5-tick chart. I still use the 5-tick chart on TradingView because I like the bars. I like the bars that they present because they work well with the market structure as well. But that's TradingView finished. Then I move into Sierra. So Sierra brings me back to TopStep. So I did work with TopStep. Some mightn't like this, but I worked with TopStep. I got funded and I got some money out of them, and I went my own direction because I found the accounts that they're advertising to take 20% from you is not worth it, because when you learn about futures properly, you'll find out that actually the combine is only providing you with the 50K account is actually really only providing you with 2K account. So it's not worth it in the long run. Now, don't get me wrong. Actually, if it wasn't for TopStep, I probably would have blown myself up because I didn't know a better way. Until now, I do know a better way. But I probably would have blown myself up multiple times in my learning process because I definitely blew up plenty of trading accounts with them until I got funded. But anyways, I've gone my separate ways. They served their purpose in my trading career, you could say, and they got me to a point where I'm profitable as a trader, which is fantastic. They force you to understand the risk management required because of their strict rules. They force you to learn the risk management required to trade for them, which is great. But on the flip side of that, it can create, because you say if you're not working on a consistency level, getting into it, and you're coming close to certain levels within the combine, it can force you into behaving badly or building bad habits, because you might just take shot. If you're coming close to your blowout the account, you might. What I used to do is I just no stops, let it run, let's hope for the best kind of scenario a few times. That can build, even though you don't realize it. Now that I have come and looking back on my journey, you don't realize it, but creating those bad habits can be extremely destructive subconsciously when you get into your action, when you should be just following strict rules. You can that's the only bad thing I would say about them, is it can force you to build bad habits. And the alternative, which now I am aware of, what I would suggest to anybody who's considering day trading, is to actually just trade minis. sorry, micros. Just trade micros, because or if you set up, I work with a broker. I don't know if anybody works with them. I'm not recommending them or anything like that, but they're really easy to use and really easy to flow. Now they require Sierra charts. Well, they don't require Sierra charts, but through research found out that Sierra charts for me is probably one of the best day trading platforms, because of the availability of all certain things within this trading platform. And AMP have this setup process which makes it streamlines everything for you, so it makes it easy. Basically, they integrate. So I'm connected to AMP. They organize your data feed, your Sierra chart subscription, and everything just goes into one package. So it's easy with them. And if you set up with them, if you put a couple of $100, I think it's $100 or $200 into the account, you can trade SIM on here, and the SIM is pretty good. I have it set up. Do I have it set up? No, I don't have it set up. Let's flip to SIM for a minute. So on SIM, you can trade, which is basically what the Combine is. So you can go in and learn the rules of the Combine because they're quite good for learning risk management. And you can come in and you can apply those rules to a SIM account for free, and it doesn't cost you anything to reset. You can track if you have the discipline. You'll need that discipline to become a day trader anyway. But if you have the discipline, you can come in and you can trade SIM as if you're trading a trading Combine, and it costs you nothing. So it's free basically. And then when you become consistent at trading SIM, and not only is it SIM, but it's live SIM. So say you come in here and you put an order on the DOM, and there's like 100 people in front of you. It won't fill your SIM position until those 100 people are filled on the regular data, on the real life data, you could say. So it's as live as the trading Combine is. It's exactly the same, which is fantastic for trading SIM. And then when you're finished, when you're finished trading SIM, you can then come in and you can use the SIM. As you can see, you can play around with it anytime you want. Just flip back and forth between SIM. But when you're not using SIM, you can use the micros, and the micros are 10% of the minis. So you can come in and you can trade $5 a point, which is 4 ticks or $1 in the S&P. It's $5, so it's 10% of what the micro contracts are. So if you were applying the Combine rules to trading your micros, it's actually the same. I.e., if you lose 20 points, if you lose 20 points trading on the minis, sorry, the micros, I'm going to do that a lot, sorry. If you lose 20 points trading the micros, it's going to cost you $100, which is basically the same as blowing up your account on TopStep and having to pay the reset. But of course, the advantage is if you're consistent from trading SIM on here with the 200. Now the data feeds, let's say all in all, are roughly, we'll say $100 a month, but that's including the subscription to Sierra. So it's 75 outside the subscription to Sierra. Now there's other platforms you can use, but I use Sierra anyways. Yeah. Where was I? So yeah, if you've got whatever way you decide to trade, i.e., if you're trading strict setups, or like myself, if you start trading criteria, and you're consistent and you flip over to the micros, rather than trading the Combine and getting the profit targets that they have, like the $3,000 profit target or whatever it may be, you're actually gaining, that will be a $300 profit in your account. That then you can decide whether or not you want to flip up to the micros, yeah. But not only that, the idea, well, again, it's everybody's personal trading preference, what way they approach the market. But for me, the idea for me is I want to scale up. So with the micros, bloody hell, with the micros, it'll teach you to scale up. So you can start using 2, 3, 4, 5 contracts at a time as your consistency grows. And then rather than look for 10-point moves, you're looking for 2-point moves with size. So you're in. It's kind of like a form. This is kind of like a form of scalping. But if I was to show you, let me show you for an example. Control 7. So if we draw an arrow here, this is 1, 2, 3, 4, 5, 6, 7, 8. This is $100 on one contract of the micros. Sorry, the minis. I get it right one at a time. So this is $100 if you're trading one contract in the minis. So if you can learn to catch these moves, with 3, 4, 5 contracts on the micros, you're just basically adding a number in to your your stop is going to you're going to take more of a loss, obviously, the more you scale up. But if you've proved to yourself, obviously, consistency, there is absolutely no reason that you can't just multiply that one contract by 5 and make that a $500 move. One of those a day, and you're done. I mean, it all depends on what your plan is and what you choose to do from a day trading perspective. But it becomes very easy, but extremely difficult, is how I'll put it. Because yes, it becomes very easy, but it's one hell of a journey, because you have to be extremely disciplined, and you have to be able to walk away when you take your loss, or if you don't have your criteria has to be A plus plus plus. Depending on what kind of size you're going into, you'll have your A plus plus setups, and then you'll have your fades or your breakout trades, which are going to be slightly lower criteria, and you'll just take smaller position sizes on those. But learning all that with the with the micros, with the smaller one anyway, whatever. The minis are the big ones, the micros are the small ones, for anybody who's confused by now. But yeah, so you can practice. And now to get into it, the reason why. So, and back to the reason why I left TopStep to trade my own account. Number one, once you get above the $5,000 profit with TopStep, everything after that, you have to pay them 20% from your profit. It doesn't seem like a lot, and it seems like a pretty good deal when you're considering the 50 grand account. But when you're actually considering the fact that it's only, and you have to be out of all your positions by the end of the day with TopStep, which is basically day trading. Is day trading. It's not basically day trading. It is day trading. And with AMP and with brokers, the margin requirement for trading one S&P mini contract is only $400. So that means you can trade 5. If you have a $2,000 account in AMP, in theory, obviously you're never going to do it because you're on the limit of getting margined out. But if you have a $2,000 account, you can trade 5 contracts of the S&P mini. That means 1 point move or 2 point move is $500 profit. And of course, your risk is the same on the other side when you don't understand the leverage. But so with the micros, then it's 10% of that. So it's $40 margin is all you need in your account. So you can start with a $200 account trading sim and trading micros until you're comfortable to move up to scaling into minis. Or you can trade your $200 account up to a $2,000 account and prove to yourself that you're capable. Then trade your $2,000 account up to your sky, whatever you want. So that's why I've moved away from TopStep, because actually the margin requirements of holding positions intraday is much smaller than if you want to swing trade futures contracts. It's 10% basically of the actual size that you need. So it means that the cost of entry is a lot less than what you're led to believe. Yeah. So in here, basically, then in Sierra, this is basically, these are range bars or tick charts, as they're called. And I use these again for marking out horizontal support resistance. The advantage of Sierra, as I explained already, is you got all these tools, and I explain what this is now. So this, for those who've completed level 3, will know what the DOM is. And all this is the inventory sitting on the DOM. And when you get into the DOM module, you'll understand that price wants to move to inventory and not away from inventory. You'll learn all that if you decide to complete the level 3. But as we move in here also, if you see price moving, sorry, just for a second, let me just get this pen tool for a minute. Helps me with my descriptions. Try this over here. Right, okay. Ah, shoot, hold on. open it up again. Okay, and I just want to check in. You're seeing the right chart. Yeah, okay, you're seeing the right chart. Okay, so this is inventory. So not only does it provide that kind of, I don't know, inside look at the DOM in a very visual, a very easy visual way to understand that price wants to move towards inventory. You know, we're probably going to come up here sometime before the end of the day, more than likely, because price wants to move towards inventory. Not only that, but as price is either breaking down or breaking up, you will see like this, you'll see the bids, they'll start to chase the price. That can be very good. You know, if you're in a position, it can be very powerful information to keep you in the price, and you're not running to, you know, stop yourself out or get yourself out of the position. And vice versa, if you're in a trade and you see big offers stepping down into the price, it might be time to scratch the trade. It's all information that not you don't always have. It's criteria to, as I call it now, to qualify or disqualify the trade entry, and you want to flatten straight away. You know, if you've got contradictory information coming in. So that's something I use. And then, as you saw on the chart I was showing you earlier, so this is a 20 tick chart above I use for horizontal support resistance. This is just a 5 tick chart. I'll show you my next monitor in a second. And then a cumulative delta is basically the difference between the amount of contracts bought and sold on the day. That's down here. And you can see sometimes divergence in this, which is a powerful tool. So price is moving up, but yet the contracts are being sold, more contracts are being sold than being bought. And of course, we all another powerful tool for information as to where we want to go next. Basically, it's all just basically. It seems like a lot, but when it's all kind of in a flow, it all combines together very easily. And you either have the criteria to get into a trade or you don't. It's basically that simple. You get to that point eventually where you don't think about anything. You just either take it or you don't. So on this now, what I'm looking at is basically those range bars that we saw a minute ago, but these are inside the range bars. So this is the business that has been completed. So these are contracts that have been filled and bought and sold at market. So if you have a level, this is inventory again. This is just that heat map sitting on top of this chart basically. But in here, these are market buyers stepping up into price. I guess that can give you some powerful information. And this is market sellers stepping down into price. So if you have inventory sitting at the bid here, or at the bid here, and sellers step down into here, that's market selling. So these guys, they stay here and they do nothing. So all you see and what moves the market is the buyers and the sellers who are pushing the market back and forth. And this is the information inside that, what's happening inside. So you can, as you can guess, I mean, you can gather some very, very powerful information from tracking this this footprint chart, it's called, which is basically all the participation that's happening in live now. This is the currently what's happening right now on the S&P futures contracts. So I'm just gonna stop sharing for a second and flip over to my other screen, so to give you another idea what I'm looking at. Okay, we're looking here. So then over here, I used to use a correlation chart, but I've started moving. Are we okay, Kevin? Just before I move on, do I flip that out?
Yeah, everything looks good.
Yeah, good. So then I just flip over in here, and this is what I'm looking at again, just to qualify or disqualify trades. So I'm looking at the 10 tick, which is a 10 tick range bar, which is 10 tick. So, sorry, I didn't explain what these range bars were. So these range bars, removing time from price action, basically when price moves 10 ticks up and down, it prints a range bar. That's all it is. Each one of these bars represents 10 ticks of price movement. So that's why they're powerful for horizontal support resistance, because you're seeing the levels where it's stalling on price and not time. So candle charts look totally different to the price action you're seeing on these charts. And what this is giving you, say you have a major institution or a major player who's buying a position, or as you could call it, defending a level. So he's, every time it gets into that level, he's buying. And when you see that, of course, that gives you information to join them or jump on if once you've got other criteria that line up, you know, your volume profiles, your horizontal support resistance levels, whatever it may be. Your the black line is a US VWAP and the pink line is a Globex VWAP. VWAP is again another. These are all day trading stuff that are hugely powerful tools for day trading. And you're just, as any of us retail traders are doing, all we're looking to do is jump on the backs of those big guys when they decide which direction they want to take the market. So having that information is basically is the idea behind all of this. Then in here, because the Nasdaq, the markets are a bit screwy at the moment. I used to track inverse correlations, i.e., bonds, gold, Japanese yen on a correlations and inverse correlations chart. I used to then track the correlated charts like the Dow, the Nasdaq, and the S&P all together to get information. But I've just, because of the way the markets are at the moment, I've removed all that noise. I'm just tracking the Nasdaq at the moment. So I watch the price action in the Nasdaq, because sometimes what you'll get, sometimes S&P does lead Nasdaq, but more often than not, the Nasdaq leads the S&P, because it's more of a volatile market. It kind of moves a bit more sporadically, very, very difficult to trade if anybody's ever witnessed it. But the price action is the same and the market structure is the same. So when you can see market structure playing out on the Nasdaq, maybe the Nasdaq breaks down before the S&P, and it can give you kind of an extra tick in the confirmation box that your trade, if you're hunting short in the S&P, that your trade is going to be a good one. Just again, it's all about edge and having that little bit. The more information at the easiest amount of effort is all you're looking for to add that edge, continuous edge, to increase your probability of successful trade. That's all it's all about. That's all any of this is basically all about. I hope I didn't blast you all rapid fire there. I'll just check in. I saw a couple of questions popping up. I'll see were they anything related to this. Peter, so are heat maps standard in Sierra charts, or is that an additional tool? No, everything is standard in Sierra charts. Basically, anything you can think of trading related seems to be available in Sierra charts. But the problem is, I'll give you a quick view. The problem is every single tool and every single indicator that's in here is programmable. As in, you have to go drag through this information and find, it takes time, and find out how to make all these tools fit. It can be quite labor intensive, but if you can find a way to do it and you want to dig into it, go for it. There is another way. And of course, anybody who does decide to work with me in the future, once you've done all the work, or I've done all the work making it mine, I can share my chart templates with you, and then you can go in and you can either delete everything you don't like or whatever way you want to do it. So they're very easy in that respect, but there's a bit of a learning curve at the beginning, but don't be too overwhelmed by it. It's like anything computer based. It's difficult to begin with, but once you get stuck into it, if you have some sort of a foundation to work with, it can become very easy, which is basically what I've done. Yeah. And I don't think there's anything else.
There was one question from YouTube just about liquidity, and is the micro, or is the micro traded as liquidly as the minis?
Exactly the same. And actually, I trade. If I'm trading the micros, I'll just go back. Sorry, I'll swap back to the. Actually, no, you can see it on this chart down here. So let me just make this chart up here bigger. So from this chart, if I change this, is this the right one? Okay, sorry, wrong one. This one. Same one. Okay, sorry. So if I put the DOM on here, I didn't. Let me just. Okay, I didn't. Okay, perfect. If I stick the DOM on here, up here you'll see in the top up here. This is an ES, or an E-mini chart. Oh, sorry. This is an E-mini chart, but I can trade the micros from this chart. So the price action is exactly the same. Liquidity is basically exactly the same. Sometimes you might get filled a little bit better, and sometimes you might get stopped and it doesn't tick to your stop. But you're talking a tick. There's never a huge discrepancy at all. The only thing I've ever witnessed on it is a tick trading the micros. So exactly the same. And all this is I have this chart set up, this particular chart set up, that if I want to trade the micros, it's set up that anything I enter here on this particular DOM will trade the micro, but on the E-mini chart. Yeah. So basically, the only one to watch for in the micros, where are we? Micros, yeah, I'm right. Micros. The only one to watch for in the micros is the crude oil. It's rubbish. It's garbage. Gold and the ES trade exactly the same. So if you want to trade the micros on gold as well, you can do that. And again, it's 10 to the size, margin requirement 10 to the size. So really, really good low cost entry for getting your consistency. And of course, as I said before, everybody who isn't familiar with trading futures, start with sim and start building criteria, because if you don't, you're going to get ruined very, very quickly, because it's an extremely, extremely, you could say difficult. It isn't difficult, but it's emotionally difficult. It can be quite violent when moves go and getting stopped out. It can be a kind of a roller coaster, I guess, that every trader goes through, especially in a day trading perspective, because there's so many ups and downs potentially on a daily basis. But when you get and build your criteria, and you have, all you're looking for is the confidence. You want the confidence in yourself with what you're doing. Once you've got that, I mean, basically, as you grow, then once you build that, as you grow, I mean, the sky is the limit. It's up to you what you want to do. Whether you want to trade every day, every hour of every day, which I don't recommend, obviously. But I've working with this coach that I'm working with now, I did spend way too much time sitting at the computer. And working with the coach now, we've built. It's not a trading plan. He calls it a game plan. I'm nearly at the end now. Actually, I've only got 3 weeks left. I'm building a game plan, and that basically is, we've covered it. I mean, it's all been covered here on TRI already, but it's building it and sticking to it. So you've working hours. You don't trade outside those hours. If you get a trade set up or a trade criteria fit within those hours, great. If they don't, tough luck. You come back and you play the game again tomorrow. There's no, I have to trade. You have to remove all that behavior. And once you get into this kind of, as you constantly hear probably here on TRI, it's all about following the process. Once, and your plan is following the process. But once you get into that, once the momentum is behind you, when you get into following that process, I mean, the rest is easy. It's just about coming in. If your entries are there, you take them, and if they're not, you go home and you enjoy your day. Because it's all about the whole reason, I can't speak for everybody, obviously. The whole reason I got into trading in the first place is because, like everybody, you want to have more freedom and you want to be responsible for yourself financially. And if you do it correctly, it's a very nice place to be, following the process. Yeah. But if you don't, and if you get, that's the one good thing about TRI, is you got the community here, to just say, oh, I had a terrible day today. You can bounce. You'll meet friends in your classes that you'll probably stay with in here as long as TRI is here. If you stick around in here, that's the joys of this community in here. Yeah. So that's basically it. Probably babbled a little bit back and forth there, because I don't know, as you can tell, I'm addicted to this this game. I love it. Everything about it is joy for me. But that's not to say I didn't go through some rough some rough learning curves, you could say. And that's why I kind of wanted to bring some of this into TRI, to help take the edge off that learning curve for some people who might be interested in taking the day trading route, because the discovery process can be quite a difficult one at the beginning. Yeah. Right. So that is me. If anybody has anything else before pop cool, off, that's it. Yeah.
That was awesome, man.
Yeah. Cool. Yeah.
Alrighty. Well, man, great presentation. Be awesome to have you come back on from time to time and let us know how it's going.
Yeah. Then, cool.
If that wasn't and then of course you guys, Kieran is the level 2 instructor, and everybody that just finished level 1, I highly recommend joining him there. So some of this stuff you guys get into, and not all of this, of course, but some of these concepts are part of the level 2.
Yeah. A lot of them: volume profile, moving averages, horizontal support resistance, scan.
Yeah. So a good chunk of it, really. Cool.
Yeah, very good. Right, I'll stop sharing and let you go to the next
Awesome, cool.
chapter.
Yeah, David's gonna come on now.
Cool. Ah,
Cool.
good
Hey,
talk.
everybody. Let's
Hello.
see. Can you hear me?
Yeah, totally. Loud and clear.
Okay. Share. All right. So, can you see my screen?
Yes.
Nice. That was awesome, Karan. Thank you so much. And I think it was really interesting because a lot of the stuff that he said, it's like weird. There's going to be a lot of overlap in our presentations in a certain sense because uh, he was talking a lot about multiple timeframes, other platforms, and stuff like that. And what I want to show you guys today is something that's been a game changer for me, which is the difference between TradingView and Thinkorswim, and why I've kind of said, all right, if I want to be a professional trader, or if I want to really make money from trading, you know, where do I have to be and where do I have to be trading? And it's not that I necessarily need this for charting, but as I go along, there's going to be all these kind of different reasons for why I've kind of migrated over here. And actually, let's kind of get to that. And I made a little bit of a document where you can kind of see the difference between TradingView and Thinkorswim. And by the way, Thinkorswim is a desktop and mobile platform for TD Ameritrade. So this might not be as useful for international people if they don't have access to this. So sorry about that. And if you just want to trade crypto, so that's the one thing I'm going to get into, then it might not be so useful. But for a select few people who are looking to play in certain markets, Thinkorswim, I think, can really elevate your game. It's a professional trading platform. There are people who trade millions and millions of dollars on Thinkorswim, and so I had never even heard about it until earlier this year. And I was just using TradingView for the last 3 years, ever since I've been in TRI. And when I got opened up to this world, it seems that I don't know if you guys could hear that or not, but it seems I just finally got filled on something here. And that's one of the cool things about about Thinkorswim, is that they give you like real-time alerts about shit that's going on with your account, like fills, and you can do all that kind of settings. And when I get into this, it's gonna make a lot more sense of why this is so much better. But basically, I do like TradingView. I like it a lot, but especially for chart art, if you want to like draw anything or ease of use. So basically, Karan said that you don't want to get away from that. Then TradingView is great. If I was Colin and I'm doing analysis and I want to show that analysis to everybody, then TradingView is going to be much better than Thinkorswim. Like, for example, if I go here to this chart and I start using my scrolling thing, I can't actually move this chart. If I grab it and try to move it, I can't do it. If I want this to move, I kind of have to move it like this and move it like, I guess it's kind of locked to a certain thing, to, I think, 1 day on here on this 5-minute chart. So it's just not as pliable as TradingView. So I give TradingView definitely the edge for that. Social sharing, you want to take a screenshot, post it somewhere, it's like boom. Or if you want to like do any kind of social stuff on their site, it's a lot better. There's just like a billion indicators, right? Everybody's making all kinds of indicators, and there's a huge marketplace for that. So TradingView is really great for that. I really like the replay feature on TradingView. Now they've got something similar on Thinkorswim. It's called On Demand, but it kind of sucks. It's just not as good. Now, the thing that really drives me nuts is if you want to do day trading on futures or whatever, right, Karan? Like, you can't even do replay on TradingView. Can somebody explain to me why that is? I don't even know, but I've been wanting to like try to test day trading things on the replay. or on the, yeah, I think they call it replay on TradingView, and it doesn't work, right? So, and then, what's cool is that you can have like kind of anywhere access. You're just using a web app, and that's kind of true for TD Ameritrade. Like if I really want to trade on a web app, I could, but it won't be this platform that you see, like this one right here. It will be, their kind of online thing, and then they also have a mobile app, which is pretty good. But the charting, you're going to lose all that stuff or whatever. What's nice about TradingView is you can even do charting on a mobile. But the worst part about it is that you have to pay several $100s a year for it. And it's really just a charting platform. It's not really a trading platform. You can trade off of it, but the trading, it sucks. I think I actually have TradingView over here. Hopefully not all this stuff will crash my account here. But I think if, you go to the trading panel, and I've honestly, one of the things I want to talk to you guys about today is paper trading, and I've used this paper trading module just to see what it would be like if I actually connected to any one of these guys. If you want to trade futures on Tradovate, or even on TradeStation, I mean, I don't even know why you would use TradingView and connect it to TradeStation. To me, it's like, well, you'll just use TradeStation, right? Unless you're like me and you have a Mac. And that is one of the biggest considerations for me, is that I trade off of a Mac. And so Thinkorswim, this platform is actually native to Mac and to PC, which if you look at TradeStation or NinjaTrader, Sierra Charts, MetaTrader, all of the biggest charting platforms out, the most popular charting platforms, are all native to PC. And so if you want to run, one of those platforms from a Mac, you basically have to get Bootcamp or Parallels or whatever, and they all use a good amount of memory. So then you're using it on top. And so for me, just working off of a laptop, wanting to kind of have that lifestyle where I can do this from anywhere, it was frustrating to me, and I didn't want to. Also, don't like the usability of PC apps and stuff like that. So for me, it was a big selling point that I could actually download this platform, try it out for free. They give you a 60-day simulated trading account, and one thing I really want to say about that is, I know that Brian teaches to paper trade in the level 1, and if you've taken the level 1, you know that he teaches to paper trade on an Excel spreadsheet. And as much as I'm a fan of paper trading, and to a certain extent, you're always going to act differently when it's your actual money on the line versus actually doing just doing paper trades. So it's just kind of to build belief, right? Because then you have to kind of get your emotions in check, like Hiran was saying. You can't expect to make exactly the same unless you're like a robot, right? And we're not. We're governed by decisions and emotions and all that kind of stuff. However, paper trading on a spreadsheet is, I found, just not accurate. And one of the things is that I will show you is, I just had, so this is like the monitor tab in here, and I'm just going to show you guys around this because it's really cool about how you can manage all this stuff. This is like this is my smaller account. This is actually my Roth IRA. So you can trade IRAs and Roth IRAs and stuff like that for US citizens. You guys know that those are retirement accounts. And I just got filled on this Avgo trade, and you see here that I got $6 for it, and I swing trade options. So a lot of stuff that Karan was saying is actually similar to me, but he has to do different things because he's day trading. But this option didn't really have a lot of liquidity. In fact, you can see that there's a mark status up here, and then there's a price and for the order, and I had my price up here at like 625, and the mark was above 625, and I was not getting filled because I guess there just isn't enough liquidity. And even though there's a decent amount of liquidity in this name, there just wasn't enough liquidity maybe on this particular option, this strategy. It was a vertical, right? So I'm basically trading two options at the same time, so they have to clear simultaneously, and there has to be a market for that. And if I was paper trading this on a spreadsheet, I would have easily gotten 625, but I didn't get 625 because the liquidity wasn't there. So if you're actually serious about trading and you want to paper trade to get your chops up, then I highly recommend, and it sounds like Karan was recommending the same thing, is actually use simulated trading. Don't just use the spreadsheet, because I did not get filled. Even like in live trading, I didn't get filled when the mark was exactly the same as my limit order. And if I had come in here with a market order, which I never do, I don't think I've done one single market order, or maybe one, just to see what happens. It's usually a disaster. So I think most traders won't recommend a market order, depending on the situations, the type of trading that you're doing. But you can see that I got, and this is $25, right? So 25 cents difference. So it's significant. Now, what's really cool about Thinkorswim is that regardless of where you are in the world, you can just sign up and get a free simulated trading account, which is almost 100% like what you see right here. And the only difference is that they don't allow like certain types of scans, and there's really no difference. And then when you start trading it, it's going to trade the actual liquidity of the market. So your fills and your sells are going to be real, or at least for the most part. So mostly real. I wouldn't say it's not 100%. And if you want to talk to them about that, you can. I know people who have. So kind of going back to this, what is Thinkorswim good for? Well, it's good for actually trading. Like if you're actually trading markets that are available to you as customers, then that's great. Like basically, if you want to actually make money, I think Thinkorswim is the way to go. It's great for options. Obviously, TradingView is mostly useless for options. It's great for commission-free stock trading, and so what I'm doing is not commission-free. It's 65 cents a contract for options, but if I want to just trade stocks, they made that free now to compete with Robinhood. And I probably should have put another thing for Robinhood here. It's like, what's Robinhood good for? Robinhood is good for basically nothing. You can do option. It's good for retail traders to lose their money. Basically, you can do options for $0 commission, which is great. But what's not so great is looking at their options chain is kind of insane. And then I'm going to show you guys today also on Thinkorswim is scans, and then scan watch list. This is probably the coolest thing about Thinkorswim. It's great for fundamental research. You can trade futures on it. It's actually got real useful paper trading. So you get this 60 days for free, and then you can do it unlimited once you get an account. And they also have a mobile app, like I said, and it works on Macs, and it's free with an account. So you have to pay like, I don't know, several $100 a year, depending on what deal you get, in order to have like certain amounts of alerts, certain amounts of time frames, or like the different windows. Like there's all different types of limitations on TradingView as you kind of go up. Like they have a free thing, but you can only have like 3 indicators on that. Somebody can correct me if I'm wrong. By the way, guys, if you have any questions or comments or whatever, just put them in the chat. I'm happy to take a look. I'm not on YouTube, but Kevin can look at the YouTube stuff and let me know. And basically, the difference here is like they don't limit anything here. It's like I can have unlimited amounts of alerts with a free account as long as I have an account, and it's a $0 minimum. So there's and I'm going to show you some of the stuff that you can do with this. It's just incredible compared to TradingView. If I go back to TradingView and I realize, okay, well, I've got 2 time frames here. Sure, I can open this up. I get rid of my watch list. You know what? I'm like, hey, I could go to 4 time frames, and I do this sometimes, and then it's going to kill my computer. So in order not to it, I don't want to like crash anything, and you can tell I've got like a bunch of crap open right now. So basically, it just squashes them together, and there's no real way, a good way for me to navigate through this. Of course, I can kind of do this. All right, now I'm kind of opened up and go back and kind of switch between these things. So I've learned kind of somewhat quick ways to kind of go through that. But when it comes to charts and getting through different time frames, what's really cool is that, so you can do all the way up to, I don't know what this is, 6x4 or something like that. Obviously that would be really small, but I'm actually on a 4x2 right now. You just basically the way that works is I can switch it back just like that. And sure, these are pretty small. You can't really make sense of the whole thing, but it's really easy for me to kind of go and maximize that sell. So I'm on the monthly, now I'm on a weekly, daily, 195. So I use a 195 just because that's half the day on a basically on a for 6.5 hours of trading in the U.S. open markets, and 78, which is half of that, and 39, which is half of that, and then here's a 15, and then a 5. So I don't really need all 8 time frames. It's just I think I need like 6, and it would be kind of or suppose I need 7. And then I was like, well, I guess I'll just add 1. I kind of like the 5 minutes a bit superfluous or whatever. But the other cool thing is that I can kind of click through here and I can go to 4 time frames, super easy. And then I've kind of got my setup in a little bit. I'm going to show you kind of like this indicator, this squeeze indicator. And basically, I can see the squeeze across 4 time frames super easy by doing that. Now, basically, if I go back to 8 time frames here, it's gonna scrunch it so that I can't see my squeeze again. But the way that I can shuffle through these is just so fast that I can basically see how this momentum indicator is working all across the various time frames. And so it's super helpful. And then I'm going to show you also this indicator across the top, which is why I came back here, which shows basically these utility labels that just kind of come up on the screen. This is I think a pretty unique thing for thinkorswim, and you got to have the right code, obviously. Looks like the S&P has decided to come off some resistance here, and I'm kind of like Karan, like I draw my support and resistance lines. These come from something else that I don't have time to get into today, but that would be kind of cool if we kind of bounce off list level right here. But anyway, that's kind of the charting, and it would take me forever to just kind of go through all of the different things, but you can kind of save all these styles and load them up, and you can have all your different time frames here, and you can do a customized list of that, and then you can go in and hear all the different options. And so it's really customizable platform, super amounts of options. And then here are all the indicators that are kind of just built in, and of course you can create them or import them or whatever, and there's no limit to the amount of indicators that you can put on your screen. And this is like a free account, and you can see that I've got quite a few of them. I've got my moving averages, and what's actually really cool, I keep finding new things that you can do because I'm actually pretty new to this. But on the daily, this is actually the weekly 10 moving average. I can actually superimpose that with one of their built-in indicators onto this chart, which is really great and helpful. What's not really great and helpful is it's super hard to draw a trend line like on RSI. And I mean, I can do it. It's just kind of a pain, you know, like, oh, how do I gotta get like super low here. I guess we're still in bull mode, Julian, right? Okay, but then I have to go back, so it doesn't take me off of that. So it's really not great, super great for charting. But you know, you can easily get fibs and stuff like that. So it does what I needed to do in terms of charting. And then you also have this kind of flexible grid. So these are all the kind of market internals that I look at in terms of looking at the markets every day. And I can do the same thing here. You know, okay, so I look at my put call ratio and the SPY and the Qs and the transports, and that's the SPY put call ratio, is it? And the trend, and here I often just like watch the ticks throughout the day. So basically, and then I can make them as big or as small as I want them to be and kind of move it around. So this is just kind of a more flexible thing. So really liking how I can see everything. I really like how I can see everything kind of at a moment's glance here for the market internals that I want to see. Now, beyond this, they also have a lot of, you know, like just to explore some of these other tabs. The market watch is really cool because, and I usually keep it on calendar, because if I say, well, you know, I want to know when does Apple have earnings, a dividend or a split or something like that, but mostly I'm concerned with earnings. It'll come up here on the calendar if it's like for sure. I haven't even gotten into a lot of these other tabs, but this is actually pretty cool, and you can see this on plenty of sites. So they have a lot of stuff that other sites have, but because it's all built into the same platform, it makes it really easy for me to kind of come in here and just say, okay, well, what are the indices doing here? Obviously, the NASDAQ is up, and obviously you can see I have a full watch list here as well that I've created of all the futures, and then the different top indexes, and then all of the sector lists and stuff like that. So I can see, you know, and we're obviously having a very up day because yesterday was kind of a, you know, poop the bed type of day. And so this is really nice. And I think that, you know, I haven't really been using any of these other tabs, so I don't really have much else to say about that, but it's really cool. And then if I wanted to come in and analyze Apple, I could literally buy it or sell it off this screen, which I'm not really doing, but they've got like the different ratings or whatever. And then, or if I just want to know, like, okay, well, what sector is it in? It's going to tell me what sector it's in. And then what's really nice about these fundamentals is that they go back so far, and then you can kind of see like trends. And I mean, there's all kinds of stuff. Like if I want to know what the PE ratio is now versus what the 5-year average is, I mean, it's pretty insane. But 32 is actually not that bad for Apple. I remember when it was down like at 20, I was like, well, that's probably a buy, right? And it turns out it's pretty right about that. And you can see all this different stuff. What I also like is that if we go back to the charts, you can see that it's switched over to Apple. So so I'm doing my research on Apple, and you can see, you can link these. And so all of these charts are linked to this like number one here, so that if I switch over to, you know, Amazon, when I go over to look at the calendar, it's gonna, because I have this link to a one, it's gonna show Amazon. And then if I go over to the analyze, it's going to show Amazon. So now I'm kind of, or if I go over to trade, see, I've got it linked. You can see that it's showing Amazon. So this is really cool. This is the options chain. And you can see you can trade pretty much anything here. You know, we look at the singles, and you hear all the different series, and there's so much stuff you could do here. You could change the strikes. So I just want the 4 closest strikes, or I want all the strikes, right? And there you go. I usually have it set to 14, which is the max you can see without kind of like crowding your screen. And I don't know what the hell just happened. Oh, it's only showing me. Maybe it's just, yeah, there we go. 14 strikes, and you know, you can trade verticals. So I've been trading singles, verticals, and you can do, you know, unbalanced butterflies, whatever. You can do them all, and then you can change your layout. So like Kevin, we were talking about like, well, what, you know, what can you look at in terms of options? You can kind of do some of their presets here, or you can kind of do a customized version. And these are the ones that I want to kind of look at, which is like, I'm mostly looking at delta, open interest, and volume, but I'm interested also in implied volatility. And then you can see up here, you have the implied volatility, and then you have the expected move right next to it for each one of the earnings series. Or what do you think, what they think the stock can move one way or the other over the different time frames here. And then because you're in the trading panel, you know, if I want to go, let's say I want to buy this, it's just going to pop up with the order entry. And, you know, maybe I'll make a trade while we're live on the call or whatever, but it doesn't matter that much. But, you know, when I go confirm send, it's going to show me my max profit, max loss, all this kind of stuff. And, you know, you can choose your account. Let's get out of that before I buy a, you know, a $52 call from Amazon, right? And I could save this and put this in the saved orders. And there's all different kinds of stuff that makes it so easy to do. And then we go over to the monitor tab, and basically like, here are all my open positions on this account. And then I can drop down and see what they are, how many days are left. I mean, it's just amazing. And then if I want to go here, well, that was kind of a cool thing. So I can just click on it, and it show me the different trades that I've made on this one. Shows you my profit and loss on the open and then on the day. So this one's up $400 today. That's pretty cool. And then I can right click on it, and I can just create a closing order. And that's how easy it is to close the position there. I don't have to go search for it or anything like that. And then you can see up here, these are my working orders. I tried to get filled on this earlier today, and you can see it just kind of ran away. This is actually put credit spread. So what that means is that it's a bullish trade, and you kind of want to buy it back for a lower amount. So this was a good idea. I just never got filled on it, kind of what I was saying before. And then, you know, these are the ones that I got filled on today. And here are my canceled orders. And you can see the canceled orders are me moving this down 5 cents in 5-cent increments to get filled on this damn thing. And I eventually got filled at $6 because the market started to move against me, and I was like, all right, well, I'll move it down 10 cents. And then basically I got filled on that. So you can see all the canceled orders. And then when you go to the account statement, you can actually move back 30 days. You can see, let's see, profit. You can see like profit and loss for everything that you've ever traded, the options that you have open. I mean, it's really great. And then if I want to go, just show me the trades that I made on Roku, let's say, for example, and here you go, or all the trades that you made on Roku in the last 30 days. So you can't do anything close to this in Robinhood. And obviously, you know, if you're going against the other charting platforms, you can see because I went to DG to trade DG. Now I'm on the charting platform. But this combination of charts and trading all on a desktop platform is really great. Now I want to show you also one of the coolest parts about this that I don't know that anybody else has, is this scanner. Now everybody's got a scanner, right? I can have a scanner on TradingView, whatever. And what I love about this scanner, so this is a certain scan that I'm setting up. I can actually make a watch list based on a scanner. So these are like some of my 2 best setups. Tesla, and I don't actually know what MSP is. We can take a look at it, but basically I can come here, go to my personal scanners, go like that, and just select and select it. this is just to make it kind of easy. Insperity Inc. or whatever. So this one is fitting my criteria for the scan that I'm looking for. And now I can just kind of click through it. And oftentimes what I'll do is I'll go to the 4 timeframes in order to kind of see. It's just going to kick me back to the SPY right now, but because I kind of changed that. And by the way, you can totally save like different workstations. So if you were day trading certain things and swing trading certain things, you can come up here and is it over here? Yeah, so you could save a workspace. I could share this entire workspace with you if you had an account or whatever, so you don't have to set up the entire thing. And you can see here I've got I can see what I want to see, which is basically across this bottom platform. So obviously, you know, I can see all my account info up here, and then you know, I've got different watch lists for whatever. There's unlimited amounts of watch lists. There's unlimited alerts, like I said. There's unlimited charts. It's unlimited everything. It's not like there's no gatekeeping like TradingView. Like you have to spend X amount of money in order to do all that stuff, and then you can set up unlimited amount of scans and then have them as watch lists. And I think that's so cool because it doesn't require me to do the scan every day. I can just save the scan, come here, and it will just show up in my watch list. And then, of course, well, this is what I've got up. Anyway, so any questions on the? I'm gonna just check back to see if there's any questions on the or comments on Thinkorswim before I go into the indicator. Oh, so Craig says you can replay futures. You just have to do the specific contract like the ES instead of ES1. Huh. Interesting. Okay, I didn't know that about TradingView. And then Craig, I agree that the Thinkorswim Sport is really amazing. Like they just answer. And Colleen, no, I don't think they do any crypto on Thinkorswim. You can do, of course, the Bitcoin futures, but those are futures. And Kevin, are there any questions on YouTube for the time being, or should I move on to the indicator?
Yeah, no questions right now.
Okay, cool. So yeah, that's I'd say that's pretty much what I have to share on this. I mean, there's other tabs and all that kind of stuff. You know, you could use this tab or the education tab or whatever, but I really haven't done it. It's really just a matter of like, how easy is it for me to manage positions? And one of the things I was talking to Kevin about earlier is like, if you want to trade penny stocks, I wouldn't trade them on Robinhood because they cancel your orders after 3 months. So you could just set and forget so much stuff over here and just kind of see everything. And you know, what's my overall view? And I just love that. So it's been a game changer for me in terms of my ability to be able to actually trade effectively. Now, okay, so we're at like 10:30, so kind of long here, but thanks guys for hanging in there. I just wanted to kind of explain this this indicator because I've been posting a lot of charts about it, and well, I had, as you can see, I kind of have it on both of my charts now. It's kind of replaced the MACD at this point because not that I don't like MACD, it's a good indicator. It's just that I think this one, in terms of momentum, kind of serves the same purpose and one extra purpose. And if we go to Bitcoin, and I'm not going to get rid of TradingView, right? Because it's just I think it's just on Bittrex. Hold on, I'm not going to get rid of TradingView. Wait, just want to go. How to change this back? Oh, all exchanges. Thank you. Coinbase. Because I like to trade crypto. So, you know, I've kind of been, I'm probably paying several $100s a year anyway for this. It's just that I really like to have everything in one space. I really don't think I could trade options effectively without a really good platform where I could really stay on top of everything. But the reason I wanted to explain this thing to you guys, because as we were here, there was this distinct reason why I kept posting in the chat, like Bitcoin's about to make a sharp move higher. Bitcoin's about to make a sharp move higher. And I think there were a couple of people who maybe were listening to me. I have no idea, honestly. But there was, and you know, I'm certainly far from right all the time, but there was a distinct reason that I knew that, and it was because of this indicator. Or I didn't know it. It's just like I had a probably 70-80% gut feeling that that was going to be the way that this was going to go. And what this indicator is, and I'll kind of blow it up, is it's a momentum indicator. So it's literally taking like this old school momentum, and it's with two other indicators that are kind of, these dots are really important. These dots kind of show the same thing as these dots, except this indicator is a little bit more rudimentary than this one is. In fact, I kind of had to go through a whole bunch of them on TradingView, and the name of this one is, let me see what the name of this one is, JS Squeeze Pro 2. So if anybody wants to kind of look that up or feels like they want to use that or whatever, that's the one. So the TTM Squeeze is, it was developed by John Carter, who has a book called Mastering the Trade. I understand he's the one who developed it. And basically what it is when you have these red dots, these are just different levels of the squeeze that is happening. But when you have these red dots, you are the Bollinger Bands, which is a measure of volatility, is squeezing inside of the Keltner channels, which is a measure of average true range. So if I put those on my chart right now, which I think would probably be a pretty good demonstration. So we have the Bollinger Bands and Keltner channels.
While you're doing that, I'll also add that Joshua made a really cool script that shows that it adds Bollinger Band and Keltner at the same time, and it highlights the squeeze. Just if you're interested, Joshua.
Oh, cool. Okay.
So it's not the same as the TTM squeeze, but it's just kind of, it shows basically what you just created on your chart with the Bollinger Bands.
Oh, nice. Okay, yeah. Instead of using, and that's kind of valuable in TradingView because there are limits to the amount of indicators you can put up. So if you can find one of those like moving average ones that does like 10 moving averages, it just counts for one script.
Yeah, and it's cool because it highlights like where that tight squeeze is. It'll highlight when the bands go inside the Keltner. It kind of like shows a cloud. It's pretty cool.
Oh, nice.
Anyway, not to interrupt, I was just throwing that in there.
No, that's good. That's good. And you know, any way that you see this is fine, right? Well, is my Keltner showing? I think I did like a Keltner strategy or something like that. That was wrong. Yeah, that's not what I want. Sorry about that, guys. 1 second. Keltner channels, there we go. You can see the green ones are the Bollinger and the blue ones are the Keltner. And when they're outside, so when they're really outside, you can see you got nothing. You got no dots, right? And then as you start to come inside, you start to get like the white dots. And I think the pink ones, and I've color coded this by myself. So if you want to get my color coding, you're going to have to kind of go in here and customize this one. But basically, I think, I'm not sure what the measurement is for the pink dots specifically. I thought it was like maybe one leg in, but it's not. It's like kind of getting closer. And then the red dots are the ones that you really want to look out for, because now you have the Bollinger Bands inside of the Keltner channel. So you're basically creating what John Carlton calls a squeeze, where you have this kind of low volatility And when you have low volatility, the end result after having low volatility is you're going to have high volatility, right? So you kind of have low volatility and boom, you have high volatility. So this is great for options. I mean, it's pretty much great for any trading, but it's specifically good for options because options are timed, right? So if you just get an option, like let's say I got this option here and it was for like the end of July and I got like I don't know, an out of the money call or even just like a $10,000 out of the money call. And I just sat on it and was hoping for it to make a move and it just didn't do anything. Well, then my option expires worthless, right? And if you're taking a level 3, then you know what I'm talking about. Maybe you know what I'm talking about anyway, but basically you need the options to move within a specific period of time. But you can see as we came into this kind of red dots here and it got really low, once we started to actually break out of that and get these pink dots, and you can see we even got the confirmation up, you could have taken advantage of this entire move. But that wasn't the whole reason that I was feeling good about that move. What else was making me feel good about that was, and Karan really, hit on this, is that if you are, one thing that John Carlton, I'll steal from him, and I think it's totally true, is if you're not trading on multiple time frames, you're basically trading blind. Even if you're trading long term, I would recommend trading the weekly and the monthly because you're just going to get so much more information. And I think 2 is not even the minimum that I would trade on. And it really depends on the time frame again, but that you're doing. If you're doing really long, I suppose you get away with weekly and monthly. For what I'm doing in terms of options, like I showed you, I had 8 time frames. It's just going to help you time your entry so much better. And I can show you kind of on the other platform here. It's like the thing with this momentum is you can see this is a Bitcoin futures, right? So blue is the momentum is going up, right? And purple is the momentum's coming back down. And then you've got red, which is going down, and yellow, which is coming back up. And these slingshot moves are extremely powerful because we all know that markets just kind of go up and down, and they kind of do it on a different, they're basically oscillating on like different time frames, right? And you've got, monthly momentum, like the longer term cycle is up, and then you've got weekly up, and you've got daily that might be coming in, right? So if we kind of go back to this one, here, this is the daily, or sorry, this is 195. Sorry, my bad. I'm like selecting all kinds of crap right now because I'm like, I got to put this back. This one of the, like I said, the charting can just be kind of difficult. If I blow up this, so that was a weekly that I was talking about before. You can see the dots coming in, and you can kind of see that this is creating an upward momentum. So as this upward momentum is kind of coming out of the squeeze, you can see that this move is about to happen. And if I go to the weekly, I have all the support in the world in terms of the weekly. We're up here, and you can see this move is kind of actually getting played out. You usually have about 8 to 10 bars, but because it's Bitcoin, it really tends to go further and longer than anybody suspected. If you have, you're really looking for 2 bars going the other direction can kind of give you a confirmation that, the move is done, and you kind of want to wait for these to close as well. But I wouldn't necessarily want to wait for this to close on the weekly. I can kind of get my confirmation here on the daily. And I've been saying for the last couple of days, I think Bitcoin needs to take a bit of a breather. Okay, so how much of a breather? I'm not necessarily looking at 195 in terms of Bitcoin, but you can see that it's already kind of take a little bit of a bounce. But I think it's going to take a little while, probably, for this to come back down, maybe retest this $10,000 area. I've heard people talking about this gap here. I think that's pretty smart. And then maybe test this 10-period moving average. I really like also the 19 on Bitcoin is really important to look at. And then basically, you know, if you go to the shorter time frame, you can see this kind of forecasted this bounces route. You can see that this is kind of running out of steam and the slingshot is coming up. So if you're doing kind of like on a short-term time frame, and then on this chart, I actually put in a 3x Keltner channel, and you can see that this is kind of getting overextended. This got overextended, and then you could kind of say, okay, I think, you know, I'm not going to be a buyer up here on a short time frame. I could think about becoming a buyer here. Okay, this is coming off, and then the momentum starts to move up here. So, but I'm not necessarily so interested in this trade because I don't really have any squeeze here. I might be more interested on the short side here. As this starts to come off, you can see, boom. I'm not gonna say this works every single time, but you can see as this squeeze comes in, you really have a powerful move down. Almost every, if I show you like almost any chart, and this will be good to, and I'd say, I'll go back to 8 timeframes. And I say almost any chart, it's basically what I mean is like, let's say if this works 70-80% of the time or whatever, you still have like that edge that Karan is talking about. And let's go to just maximize this out. You can see I still kind of look at RSI and a little bit, and I have it on my other chart as well, on my TradingView chart, because I've really learned some great stuff from Julian in terms of RSI. So I have one oscillator and one momentum thing. So it's like, okay, Brian taught us about having MACD as momentum and kind of Willie as the oscillator, but he's like, if you like RSI, go with RSI. So, you know, basically that's how my trading is kind of migrated. And I really like the smooth action of this momentum indicator, but you know, you're not going to catch this. You're obviously not going to catch this move in terms of, you know, on a monthly. It's just, you have to be able to see these things on a shorter time frame. This is not like a great squeeze because it's only like 3 dots. Ideally, what you're looking for is like 5 dots or more, but you can see even with this small one and then a kind of slingshot up, you really had a nice move there. And then for this one, it's kind of pointing down, so it's not really great. But and I'm typically trying to get in while you've got the squeeze going on. John Carter says to like maybe after you've got 1 dot outside of the squeeze, but I find that a lot of the time, especially for options, that the move is over. But you can see here that this was a you know, a nice volatile move up afterwards. I'm just trying to show kind of examples of this. There's not really great examples, but you did kind of have a squeeze here and a volatile move up. The idea is that like when you have this volatility kind of lowering, it's going to come out of that. And what is that going to look like? It's going to look like a more volatile move, right? So it's not the end all be all of indicators. Certainly we didn't, I mean, we got like 1 dot here, like this is a 15-minute, right? So basically what I'm trying to do is say, if I go back to Bitcoin, which I know that you guys are going to be like mostly interested in, which is all well and good. I'm very interested in Bitcoin. If I go back to the monthly, it's not really giving me anything on monthly. Again, going to the weekly, we can see like here back at this move right here. I remember a lot of people getting long here at this 6,000 level. I don't know if you guys remember that, but it's squeezing, right? And you can see that it's actually firing short here. Yeah, it's going red dots. So maybe you would have been starting to go long over here, but then it starts to say, we're gonna go short. And then I'm gonna look at the daily to see for that confirmation, right? I'm not saying this is the best trade ever, but it's saying, okay, go short. Now we're waiting. We get the 2-bar confirmation, and you can see this slingshotted all the way up to here, and then your 2-bar confirmation is kind of over here, and that's a pretty significant move, right? And you can say, okay, well, this is going to correcting, and you know, obviously we didn't really we got kind of screwed on that one. But you can see here, as this starts to slingshot up, you're going to get a nice move. And the idea isn't say, okay, well, I'm going to take this based on this chart. The idea is, okay, this is the weekly is showing me this move. What is the daily showing me? So if the weekly is bullish over here, and forgive me if I've repeated that, but what's the daily showing here? So originally, this is showing bearishness, but it really didn't play out that way. And then I started to think, okay, well, this is starting to get bullish. This is not the top because it's just squeezing forever. And, you know, okay, I'm going to go long, which is what I did. And then basically, you can see as we get down to other time frames, you can start to confirm them a little bit better. You can even get a better entry. You can see that there's a momentum divergence here, so you can still get divergences on this. This is a lower low in terms of price and a higher high in terms of the divergence. I don't know if that played out on the I don't see any on the daily, but you can obviously make a much longer time frame. This is just like 3 months up here. I like to have them just kind of fixed static because they're just too hard to work with otherwise. And then you can see you kind of have your confirmation here of this is kind of losing its strength, and then you kind of can go back in the daily, and like I said before, this looks like it needs to take a pause. So that's basically the squeeze indicator and what I've been using with a good amount of success lately. Like I said, specifically for options, but when I went ahead and I said, okay, I want to try this on Bitcoin, it worked, and it definitely confirmed itself on this move. And if I were to, you know, Kevin, you and I, we've kind of been batting around ideas for shitcoins. What is this? Is it CVC? This is a Civic, right? USD.
Yeah.
Yeah. What was it like?
I think we were looking at the USDC on Coinbase.
Yeah. Thanks. So I was like, hey, it made its move, right? And then it just obviously dumped the next day because Bitcoin had a rough day the other day. But you can see kind of that you have this big momentum divergence that's showing on the weekly, right? And we're moving up and we're crossing over. And, you know, if you use that confirmation, you get that first blue bar, you can see that this should be a nice slingshot. We didn't get the red dots, but we got the pink dots. And then we have, you can see this momentum moving up. It's not a divergence, but I still like it. It's one of the lesser shit coins. And you know, it's coming off its lows, and I just I like this here kind of at these levels. You kind of have, depending on how strict you are with W breakouts, I think even with this wick, you're kind of got that W breakout here. I like, you know, these candle bodies are showing. I don't like to get that strict about it because I don't think that it's you know, it's like, oh, okay, if this candle body is higher than this candle body, or this wick need to be higher than this, it's for shitcoins, I don't really care because I'm just gonna mostly buy at levels. It's like, okay, is this at the bottom of the range? Like bottom, like is it completely bottomed out? So if I think it's completely bottomed out, then, you know, I'll just come pick some up because, you know, I'm just, I'd rather be in the trade. I think we were talking about that. But that's just my trading plan. This is what I do. So you guys can use this however you want, but it's definitely applicable. And I think there was the other one I was kind of banging the table on, and I'm sure nobody liked me to bang the table on this one because Brian hates Cripple. But basically, I think it was right here around 20. And I said, you know, like, hey guys, when this moves, it moves. And we had some pink dots here. And we're about to form the W. The W would have been too late. You would have missed the move. So I kind of like this upward movement with this higher high right here, and then basically the slingshot moving up on the weekly, and then the daily kind of showing me that confirmation. Definitely had this confirmation here, and you had these red dots, so you could have like picked this up like over here at like 20 cents. All right, fine. You take a little bit of heat, and then boom, is the explosion up because you have the confirmation on the weekly, and then the daily kind of just takes over. So that's pretty much how I'm using this. I think it's been really great. use it if you want. Don't use it if you don't want. Use it in combination with your other stuff. Remember, we need multiple reasons for a trade. I'm obviously taking these trades with like location, and I'm looking at RSI and the divs that are coming in here. I like RSI for divergence. I think that's one of the best tools. I also like the RSI trend lines that Julian uses, but you basically, you guys know the drill. It's kind of just use it within your plan. It's not a foolproof thing. It's just something extra that kind of helps. And if you have momentum with the squeeze, it's like super powerful. So that's it. Let's see if there are any questions. Looks pretty solid, but only for US peeps. Yeah, sorry, Peter. A guy offered to do a free 2-hour run through the platform, setting up all the stuff except scans that you went through when I joined. Okay, well, that's cool. Oh, he's talking about your
TD Ameritrade.
Yeah, that's really cool. Yeah,
yeah, that's cool, man. Maybe we can cut that and put it in the library for anybody that needs it. That was a pretty solid review of the platform, so that's cool.
Yeah, feel free to if you want to do the same thing for the indicator. I know there's some indicator run throughs as well.
Yeah, totally.
In the thing. So yeah, there's no crypto. Okay, so if there aren't any questions on YouTube, we've been going pretty long time. Then we can kind of wrap up unless you've got anything to say.
Oh, no, man. I mean, we're doing Brian Beamish some justice here with the almost 2-hour daily brief. we're going Beamish style.
Right? Should we break his record and just like look at the shitcoins that are out there?
Let's do a complete review of Binance and Bittrex right now.
Let's see. What am I holding up here? I don't know. Like I've been super excited about the crypto market right now. I'm just holding a whole bunch of shit, but anyway, I know it's just kidding around.
No,
let's let the good people get going. I mean, they can leave anytime, but
no, it's all good, man. It'd be cool to have you back on anytime you want to come back on and share some stuff. I'd love to hear more about your options trading plan, because I would like to get more of a swing trading options plan going that I don't have right now, and I've had a hard time finding. I don't know. It's hard to find option setups, like I search all over the internet and I haven't really seen anything that's grabbed me yet. But someday I'd like to get a trading plan going where I'm doing more swing trading on options.
Yeah, well, hit me up and we'll talk privately. I got a setup that I'm using and certain thing that I'm doing. It's not really what Brian doesn't really teach it. So
yeah, totally.
It's not anything he would go against. It's just that it's not really his setup. It's not a setup that's taught on the site and stuff like that. So, but I always recommend everybody go through all the levels because, if you guys are thinking about going through any of the school programs, because even if I'm using somebody else's setup or if I'm using, different strategy or whatever, the stuff that we learn especially in the first level, with the fibs and also running a trading plan, all that kind of stuff, it's like super important to actually make money from trading and be successful. So
totally, you got to get that stuff down. And plus I think the SOF's a great way to start with options and then branch out to other things, because they are complicated, and I think level 3 is pretty much a must before you get into options.
If you want to, if you guys are interested in options, obviously take the level 3. The SOF is a little bit slow for me. I just want a little bit more action. But it's a good plan, and I think that it's just, I like to personally see that a trade is going to work out within weeks, not months. Yeah. So if you're one of those people who like to trade months, I think SOF is awesome. Like, it's totally a winning strategy. If you're somebody who likes to trade days and weeks, I suppose it could be used. It's just, I think
it's definitely more of a little old lady kind of style, longer term trading strategy.
But if you use squeeze along with along with SOF, I think that's the killer because Julian was kind of complaining to me at some point about the fact that when we don't know when these are going to pop, and if you go back to this situation where you see these red dots and then you see the pink ones and then you see the white ones, well, you're getting an indication that this is going to pop. And that might not happen for a really long time. Like this is like February all the way to May. So you might sit in this degrading your options premium for like 3 months or something like that. But if you see a squeeze and it's coming out of the squeeze, I think you need, like, if I was going to do SOF, one day I'm going to convince Brian to use this indicator because it's going to transform SOF, because basically it's going to just allow you to know with a much better certainty that this is going to break out violently.
Yeah, and you can time your purchase a little better, and plus you want to buy that option when the volatility is super low, right? So
yeah, I guess so.
Like when you're in the squeeze is what I mean, is when you want to be buying.
Yeah, I mean, that does affect the price. It kind of makes it'll make it lower. People are less interested in that. Yeah, I mean, I don't really know. Not that good at that, but I know that if you bought this option, and obviously you can't buy options on Aragon Bitcoin, which is ridiculous, but if you were in this option here, like you're saying, okay, I saw this squeeze come in, it went from pink to red to pink again. I'm like, okay, this is, and now we're going into white. All right, yeah, this is ready for the prime time. Now you're going to take some time here, but if you're in a 1 year options play, and then boom, now you got your pop, you're banging out what, 10xers
totally
on an SOF. So I think that this could be a missing piece for you SOFers out there. And if you guys don't know what secret options formula is, take level 3 and you will know.
There you go.
Anyway, we could probably go on for a long time.
Awesome, man. Well, dude, thanks so much, man. It was a great show today with both of you guys coming on. Man, I don't know. I'm always impressed by everybody at TRI. You guys are all so smart. It's humbling to say for sure to see all you guys come and open my mind to different ideas all the time. And you kind of re-inspired me, because I did mess around with the squeeze indicator a while back because something Joshua was working on and turned me on to it. And then I didn't really stick with it. I just kind of was helping him on looking at some potential algo type stuff. But now I kind of want to go back and look at it again. So thank you.
Yeah, no worries, man.
And then I guess we should just call it a day. It has been 2 hours. So thanks everybody for joining us. Tomorrow we got Julian coming on to do the baby powder report. And then Fridays, I'm not totally sure exactly on Friday yet, so I'm not going to say who's coming on. But we do have a couple guests. Like Cave Bear's coming for sure. And there might be somebody else as well. So anyhow, thanks everybody. You want to take us out, David? The only thing left for David to say is bye for now.